Hello, everyone. Good evening, good afternoon, and good morning. We are spanning many time zones here today. So wherever you are in the world, thank you very much for joining in our webinar entitled The Implications of CBDCs for Global Payments. My name is Ignacio Carballo, and I'm the head of Alternative Finance of Payments and Commerce Market Intelligence. And we are thrilled to have you in today's sessions in which we are going to be diving into this fantastic and also kind of intriguing world of CBDCs. And more important, we'll be learning from a very, very special and exclusive panel of experts that I will introduce in a moment, but welcome, and I hope you enjoy today's session. Before we go ahead, let me jump to the next slide. Before we go ahead, just a very, very quick mention of PCMI. If you are not familiar with us, Payments and Commerce Market Intelligence is an insight and strategic advisory group dedicated to the global payments industry. Our founding members have over 30 years of experience helping multinationals develop strategy in the payment industry, specifically in emerging markets, and our strength really comes from Latin America. Many of you who know us as the premier group in Latin America, America's Market Intelligence, AMI. However, we are in the midst of global expansion, currently growing our expertise and our coverage all around the world. In that sense, we already have coverage in all the regions of the planet. And that's why you should have been receiving our global newsletter with global insights and articles speaking about the different regions. We are developing several researches about the state of global trending topics on digital payments. And in that sense, almost 1 month ago, we published a brand new research about today's topic. This free white paper was designed to help payments professionals to understand the essentials of CBDCs and their potential to transform not only the payment industry, but also the opportunities and how it can change the life of individuals as users. So please feel free to scan this QR code or enter into our website if you want to download this white paper. This webinar will try to dive deeper into this white paper, and for that reason, I'm so thrilled and honored to be helping to host this session today. Today, we're going to be learning as long as you with a great panel of experts. And in order to deepen the findings of this white paper, I would like to introduce our 3 specialists of today's session. They are key leaders from the private sector, and they will give us their opinion about the implications of the CBDCs in the payment industry, but also the idea is to interact about or with the other trends related with this topic. For example, or for instance, with the stable coins or global remittances or the RTPs, among others. So I would like to introduce our guest today, Anthony Ralphs. He's Director of Product Management at Ripples for CBDCs. Stephen Steicher, he's Universal Digital Payment Network Lead at GFT Group. And Manuel Boudrois, who is co-founder and CEO at Velos. So welcome, guys. Thank you for being with us today. And I'd love for you to just take a moment and tell us a little bit about yourself and your organization. Would you like to start, Anthony? Welcome. How are you doing?
Absolutely, and thank you for inviting me to be on this panel today. A little bit of context about me and what we've been doing here at Ripple. So I've been in the payments industry for close to 20 years, working with various payments infrastructures, connecting large banks to mom and pop shops to payment systems around the world. I've been with Ripple for nearly 7 years now, and part of that journey took us on actually building out what was RippleNet and is now created a whole new host of innovations around using digital assets as a settlement bridge between currencies. So a lot of the work we've been doing over the last 6 or 7 years has largely been about building out a customer base, but also network users who are transacting today real money across the network. And as part of that, we've been working very heavily on things like the governance structure of the network, message standardization. So a lot of the work we've done actually, I think, predates a lot of the work done by the CPMI, G20 and FSB recommendations for harmonization of cross-border payments. Ripple started to get involved looking at CBDCs approximately 3 years ago. Since then, I've been working and leading the team looking at from a product perspective to address the projects that we're working in, which range from countries like Bhutan to Palau and to others that have been announced. So there's a broad brushstroke of projects that we're working with, all have different requirements, different approaches, and hopefully we'll be able to talk to some of those today during this session, but super excited to be on this panel.
Fantastic, Anthony. Thank you. It's a great pleasure to have you with us, and we're looking forward to hear more insights from you. Stephen, let's go to you. Thank you for being with us.
Yeah, thank you very much. So hello, everyone. My name is Stefan Schacher. I am German, and I'm working for a German system integration company. It's called GFT, but I'm located in Singapore. GFT is a very global company, which is present in around 16 countries globally. Mostly does innovation and application development services for bank and financial institutions. Very much on the complicated stuff, mostly like things around blockchain technology, cloud transformation, AI. This is where our sweet spots are, and this is where our main knowledge is, and this is also where our client drives us most of the time. So I'm responsible for digital assets in APAC, and I'm also the UDPN lead. So UDPN, it's basically a messaging platform or infrastructure, so to say, for digital currencies. So what we aim to do is basically to solve the challenge of interoperability and connect as many as possible new technologies who are coming out there. So this could be stable coins, CBDCs, tokenized deposits from all sorts of forms to really elaborate and look at the area of cross-border payments, not only for retail use cases, also wholesale and interbank, and really aim to connect as many as possible different technologies and stakeholders together. So you can say it a little bit as a layer one for digital currencies payments of the future, if you will. So I'm very thrilled today to be here to discuss with some of the colleagues here about like the great topic that we're all wrapping our head around, like CBDCs, stable coins, and digital assets. Looking forward to it, yes.
Absolutely. Thank you. Thank you very much, Stephen. Manu, would you like to tell us a little bit about yourself and Velo?
Sure. Hi, everyone. Thanks for the invite. It's a pleasure to be here today. So I've been in the crypto space for more than 10 years already, always pushing and thriving for more people to get in and building, innovative and novel solutions to allow both people and financial institutions to actually use this technology. So the use of, in my case, I'm a Bitcoiner by heart, and so pretty much, aligned to the technical, but also the ideological part of these type of assets and the power that these tools have for population as a whole. We, as one of my previous company, we done one of the first, if not the first, cross-border payments done for a bank using Bitcoin, which was quite a success, allowing banks and people to reduce a significant amount of the money that they were investing on doing those payments. And from 2021 onwards, been leading Velo. Velo is a crypto fiat digital wallet that empowers people to live in crypto every day, with a lot of focus into the future of work, people working for abroad, and how we can give them tools to actually get paid in local currency and build, personal finance app, which will allow them to basically take advantage of the fruit of their work. So really excited to be here. Hopefully we can have a really interesting conversation. Thanks, everyone.
Thank you, Manu. Thank you, all of you guys. And finally, I'd like to introduce my colleague, Mijail Popov, who leads the SEMEA region at PCMI and is a very recognized blockchain specialist. Hi, Mija, how are you?
Hi, Nacho. Thank you for introducing me, and thank you all for being here. It will be like a really, really nice conversation. Looking forward to hearing a lot about this panel and huge experts of the industry. And well, thank you once again. I thank you all for being here.
All right, all right. Well, the way the session is gonna work today is the following. Before giving you guys the floor, together with Mijail, we would like to make an introduction to our topic of study and also bring some general ideas for the debate. In that line, we're going to present some general concepts, and the idea is to take only 10 minutes, and then we'll start our panel discussion. To all the attendees and all the participants, please remember to send any question that you might have for our three specialists of the day, right? So let's begin with the beginning, because currently almost 90% of the world central banks have a CBDC plan or roadmap in their strategy, and more than 60% are already performing test or proof of concept. So let's start from the beginning and try to put some light in what is a CBDC or central bank digital currency. As we can see, the development of CBDCs in the backdrop of the crypto revolution, let us say or confirm that in a very, very broad and general way of this debate, there are at least three categories of new kind of digital assets. We have the floating cryptocurrencies, the stable coins, and of course, the CBDCs. The CBDCs and the other two categories are very complex categories that has, of course, subgroups inside, and the CBDCs are no an exception of that. They also have their subcategories, which must be understood in order to start thinking about the implications of them for the payment system. But in a very, very, very wide way of understanding, a CBDC is a digital currency issued and overseen by a country's central bank, and that's the main difference. In our white paper, we tried, well, this is a very long research of more than 50 pages, where we not only take a picture of the current state of the CBDCs, but we also bring light in all these different categories, and then we think about the possible and theoretical implications of the CBDCs for the payment ecosystem. But having that in mind, having in mind that we are speaking about programmable money and that there are several subcategories inside of each one of these three categories, in our white paper, we ask three main questions that we believe are useful to understand at least the main kind of CBDCs. And those questions are: who connects or has access to the CBDC? So this makes this difference between retail and wholesale CBDCs. Who the users connect to and how they connect to. In this sense, we might difference the indirect, the direct, and the hybrid CBDCs. And of course, the technological or the characteristics of the blockchain technology behind the CBDCs. If they are more permissions or more decentralized, that will, of course, make a different kind of theoretical impact in the payment industry, all right? So we want to give a very brief summary and introduction about these three questions before starting our panel, and invite our panelists to think about the trends that might impact in the payment ecosystem. So I will give the word to Mijail to briefly explain these different categories.
Thanks, Nacho, for introduction once again. And moving forward with this quick overview to provide some context, we need to explain a bit about the main characteristics, as you mentioned, and the alternatives for implementing a CBDC. So it's important, it's really important to know that there is no single form of CBDC, as you mentioned, as different countries are researching and testing diverse approaches around the world. So firstly, we can discuss about this distinction that you mentioned between retail and wholesale CBDCs. And the main difference we have is that a retail CBDC is designed for use by individuals and businesses in low-value transactions, while a wholesale CBDC is tailored for mostly for financial institutions and banks in high-value transactions. That is the main goal. And we can, of course, mention a lot of things about this distinction, but I think that something that we can highlight is that in terms of accessibility and privacy, we can point out that retail CBDCs show broad accessibility for almost all individuals, but wholesale CBDCs, of course, are easily limited to authorized institutions. So that is a huge difference. Next, I think that is important, if we jump to the next slide, it's important to address the process of connecting users with the central banks that are issuing the CBDCs. And in some cases, there is a direct connection where users hold deposit accounts directly with the central bank. As seen, for instance, in the case of an example of CBDC Bcash in the Eastern Caribbean, as one of the major and most developed examples around the world. And on the other hand, there are indirect CBDCs where banks and financial institutions distribute and custody CBDCs accounts for their customer. So this is particularly, for instance, the case of digital yuan in China. And if we move forward, finally, we have to mention and we have to delve into the underlying technology of CBDCs, where different models are actually being explored by the central banks in different proof of concept and pilot tests as well. So CBDCs could be issued using distributed ledger technologies, which is commonly known as DLT technologies, or non-distributed and centralized technologies. In the DLT approach, particularly with blockchain technology, there is a distinction between permission CBDCs, where financial institutions participate in the blockchain network, operating a permission node in order to validate transactions. And we have the case of decentralized CBDCs. This one, although not fully trialed by central banks yet, involves issuing CBDCs as anonymous and punchable tokens in order mostly to protect privacy and users' privacy. So now moving forward with the presentation, Nacho, I will pass the word back to you to continue.
Thank you, Mija. Thank you very much. So to summarize, there are different categories and subcategories inside of the CBDCs. We would like to discuss with our panelists the potential impact of these different kinds of CBDCs and their different characteristics. And to all the attendees and participants that have joined in the middle of this webinar, please send as many questions as you want to be done to our special guest of today's. So we took several pages in our white paper to present the current picture, the current state of the CBDCs all around the world. In fact, we developed a section per region telling how many proof of concept already launched or roadmaps of CBDCs are there. This is a live topic, as you know, but more than less, we have more than 130 countries that are exploring a CBDC. We have 11 countries that have fully launched a digital currency. 19 of the G20 countries are now in an advanced stage for CBDC, and huge economical markets as the European Union and the United States, as you know, they are also debating and developing their own project. But even when this is something that is changing every day, it's worth noting that the role of cross-border CBDCs might have a particular impact in the global payment. Why? Well, because cross-border transactions, as you know, have long been crucial for the development of various financial and economic activities involving individuals and also, of course, companies from different countries. The problem is that these transactions have always, or the most part of the time, been costly, slow, complex, and of course, lacking of transparency. For instance, a recent report of JP Morgan showed that to process around 24 trillion in wholesale cross-border transactions annually, the global corporations pay over 120 billion in fees. That's why several countries have been or have been exploring or have seen the CBDCs model to make cross-border payment faster, cheaper, and of course, more transparent. There are 14 relevant cross-border CBDC projects that we also study in deep in our white paper. These projects include both bilateral and multilateral CBDCs. Several of them have been supported by the Bank of International Settlements. And one of those projects is very, very well known and is the so-called Project Enbridge, that serves as a clear example of the potential of cross-border CBDCs initiatives to disrupt the payment worldwide, right? So before starting our discussion, because we want to invite our specialist today to bring their thoughts about which can be the impact of these different kind of CBDCs in the global payment industry, we would like to bring three key insights of what we have analyzed in this report that we have shared to you, and that you will receive as well after this webinar. So we can see the impact of the CBDCs will depend in several factors, mainly the characteristics of the CBDC project. And this is what we would like to speak with our guest. There are three approaches for this conversation, and that will be which, what, where, and when. In what kind of payment will be disrupted, mainly, and which will be the impact of that, cross-border versus local payments. Where that impact can be more transformational. We have found huge differences in both, not only the degree of development, but also the degree of the debate when we jump from developing countries to emerging countries, to advanced countries, all right? Because the incentives among them are very, very different. And of course, the key question, when, which is the period in each kind of potential impact that we might consider in order to be prepared for this revolution. According to our research, the cross-border projects are much more developed than the retail CBDCs. The advanced economies are the ones that are pushing this kind of cross-border project, and the developing economies seems to be more interested maybe in retail CBDCs. And between the long term and the short term, we have found some different clues when we analyze the whole picture, but it becomes very specific in each case and in each project when we might predict the impact and the transformation of the payment ecosystem. All right. So now I would like to invite our guest, and we will start with this panel discussion. We hope that you have enjoyed this briefly introduction. Let us start with our conversation. And as we go through these questions, again, please jump, and we want to have a dynamic discussion with you guys, all right? So, and to our audience, please remember, we welcome you to ask questions to the panelists, and we will throw those questions in during our conversation. So first of all, as the world moves toward different CBDCs, what do you see as the primary driving forces behind the global shift, and how do they differ across regions? How can you guys give us your vision about what is going on in the world in terms of the North and the South, or the advanced and the developing economies? And are there any specific models or frameworks that you believe are particularly auspicious or innovative? I don't know, maybe if you, Anthony, want to start with your opinion.
Sure. So I think you're right to separate out between what classes developed and emerging economies or developing economies. If I look at most of the infrastructure in sort of the developed world, largely has been around for a long time. If I look at the UK as an example, there's been electronic payments since the sort of 70s, there or thereabouts. And so that's ingrained in the culture. But a lot of the emerging markets are ones that have actually been underserved in that regard, that they've created mobile wallets, they've created other alternatives to this. And so I think where you see a divergence in approach from a CBDC perspective is these very established countries with very established infrastructure, it's very difficult to change, and it's costly, it's time consuming. You've seen this with some of the projects around the migration to SEPA. You've seen this with the UK RTGS renewal project. These are multi-year projects, and risk is always at the heart of this. It's mitigating risk and managing risk. When I look at developing economies, it kind of reminds me very much of the sort of late 90s, early 2000s in the mobile telecoms space, which is, I spent a bit of time there. We weren't putting in bits of cable into the ground in Africa, we're putting mobile masts and cell masts in. That opened up a whole new set of innovation around M-Pesa and things like that, that were very costly to do beforehand, but suddenly became cheaper and access became more accessible. I do look at CBDCs and underlying blockchain technology as a bit of a leapfrog technology. Some of these countries could deploy existing technology approaches, or they could actually potentially set themselves up for a future set of innovation and build economies around new infrastructure. So I do think that's kind of the biggest divergence in terms of drivers. I think you've got the established markets looking at potentially a threat, and we look at this not just from Bitcoin and crypto and what it does to their economies, but I think with the likes of Libra and DM, that kind of put the cat among the pigeons a little bit in terms of the thinking amongst central banks of people are looking for something else. They're looking for alternatives here that are potentially not served by the existing systems. And so I think CBDCs are part of that exploration into that and looking at that. And I think you're starting to see tokenized deposits, these whole other areas of innovation that are coming through. And I look at developing emerging markets, they have an opportunity to leapfrog and not be straddled with legacy technology, and can actually build something that is future-proof for 30, 40 plus years. So that's kind of where I see the sort of immediate divergence and why there are differing approaches depending on the market and the maturity of that market.
Absolutely. I don't know if Stefan or Manu would like to add something to this.
Yeah, maybe one question that you didn't address before, it's why, no? Because at least, I mean, I'm based in Buenos Aires, Argentina, one of the worst economy in the world right now, but we have a financial infrastructure which is better than the US. We can do payments in seconds for no cost. And what is the purpose of a CBDC in a context in which everything works fine in a way, you know? When you extrapolate this to cross-border payments, well, maybe because I'm biased because of the technology we use every day, but it seems that as a network of coordination, something which is decentralized will be much better because there is no also bias from the users using it towards the adoption. So I kind of grasp the full idea of why CBDCs in places where the infrastructure works properly are needed. We see a lot of kind of bad examples of what can happen if we see CBDCs getting popularized. Maybe the case of China is the most epic one, where you can see the social credit scoring of the persons around you. So, I mean, maybe I think that question, at least for me, it's important. And maybe do we actually need a CBDC, or it's improving the infrastructure in another way in order to provide more value?
That's a great point, Manu. And let me just, because we have started to receive questions, so thanks to the participants that are sending their questions. And one of our attendees is asking, what are your thoughts about the findings from the Risk Bank and the MAS in Singapore, that they recently said that they are not interested so far in developing or deploying a CBDC. And I would also add the case of Australia, that recently published the result of their pilot, and they say pretty much the same. They say, all right, there is a great opportunity here, but it doesn't seem so necessary to jump into or to deploy a CBDC as an urgent matter of political or monetary or financial innovation policy. So I would like to extend your question to Stephen and Anthony. I don't know, which are your thoughts about this?
Yeah, let me give a shot on that, because I'm also located in Singapore. I see the news coming out almost like on a weekly level. And Singapore, I mean, itself, if any of you guys has been to Singapore, is a country which is quite advanced on the forefront of innovation, trying a lot of things out. They actually have a regulator who does have a lot of people who are coding themselves. So they are very technology saving and stuff like this. But if you look at countries like Singapore, right, you have a population of just 5 million. It's a small island. Everybody is always connected with a super high, fast speed internet connections. You have all these mobile apps. You have all the banks which are going like half digital already, which is like payment in the retail space. It's like Emmanuel said, it's fine. It works, right? You don't really need a CBDC. But if you look at the bigger picture about CBDCs, right, I argue and I fully support Singapore, Hong Kong, places like this might not need a retail CBDC, but I fully think they need a CBDC from a wholesale perspective. So when you look down, what is CBDC itself? It's where the liability is, right? So who owns the liquidity pools? Who owns the money in the books? Who does the movement of the money? And when you look at what the real game changer that comes along with digital assets is how financial institutions are doing their business today. The entire world of like fiat currency, or what is happening with fiat money, in how the banks are moving money, correspondent banks in between, holding money for a couple of days where nobody really knows where it is, having contracts in place that favor a certain like economic statuses and stuff like that. This is all something that gets really impacted on a big wave in the ways of like digital currencies and digital assets. And I think when we break it down and saying like, we don't need a CBDC, we see it or not, I think this should not be the question. I think when we break it down to the use cases, where does digital currencies and where does digital assets really have a clear benefit? And some of the points that Anthony mentioned in terms of like people who are underbanked and underserved, there is a very clear value proposition that CBDCs have a place to play. And what I really believe is going forward to that, CBDCs or not, when you look at the technology itself, is it a CBDC? Is it a stable coin? Is it this? I think you outlined it quite nicely in the research that you have produced. In the end, it's a form of like digital currency. Where's the liability again, right? So if you also strip this away, what we are seeing today already, there's so many organizations. I think we are talking around to 30 banks actively at the moment of our POCs that we are doing. 90% of them, we are discussing about stable coins, deposit coin initiatives, and the other 10%, they're just not telling us, but everybody's doing something around that. I believe in 2024, there will be so many projects, so many new stable coins coming out of the market that sooner or later we will be not able to maybe track all of them anymore. It will be, I believe, even more than cryptocurrencies out there, because businesses will combine this with loyalty. Businesses will use this as a form of transactions. E-commerce companies, telcos, airlines today, I think they will all going down to this trend to basically get also a part of the cake for this use transaction cost that you have mentioned that is going on globally. And I think we are just in a very short stepping stone away from a massive change in the financial industry. That's what I believe in this area.
And perhaps if I can come in, I wholeheartedly agree. I kind of look again. I kind of back from an evolution of the financial services space, and I've seen more innovation in the last 10 years than the first 10 years of my career in this space. I think there's so much happening. But a lot of today's systems are based around essentially analog or paper processes of, I write a document, I send the document, somebody actions it, sends it back to tell me they've done something. Most of the domestic payment systems operate in that way. That is still fairly inefficient when we think about it. If we think about the first version of the internet that everybody kind of started to embrace, emails were the equivalent of sending a letter. And so there had to be an adoption of sending email, first of all. And is it permissible in court? Is it all of these kind of things? How frequently is it used? You've then seen a paradigm shift in terms of instant messaging, where you've got real-time interaction with the counterparty you're talking to. I think blockchain, DLT, digital assets enable that kind of experience. And when you look at a lot of the inefficiency in the financial services space and the financial infrastructure, it's because everybody's all sharing different copies of the data. You're having to reconcile it, you're having to work it through. So just answering the question here about RTGS 24/7, I don't think it solved the problem of wholesale. I think it basically just means it's more available. There's more liquidity potentially required to be trapped into the system that might not be efficient. It's that all the periphery that actually interacts with that system might be tokenized. And so you're creating a two-tier system. And what we're seeing is a lot of the use cases are, we'll tokenize a bond or security or other form of asset. Actually, there needs to be a tokenized settlement asset to get the real benefit of it. And so this is kind of, it's a wholesale mindset change of thinking about a tokenized economy rather than an economy that essentially is digitized paper. And it moves to a fully digital infrastructure. And I don't think we're there. We talk about having digital versions of ledgers. They're digital versions of paper ledgers. This starts to get to a single source of truth, more efficient, lower cost. That potentially drives down friction, makes it more accessible. So I think it has to be thought of in those contexts. And like I said, if you look at the most of the sort of the G20 economies, it's a bit like comparing sort of oil tankers to speedboats when we look at emerging markets. Emerging markets don't have all of that historical legacy infrastructure, so they can be more nimble and try things out. But actually, most of these countries we speak to as Ripple, they're wanting to create that innovation platform for the future, building on new ideas that we just don't see as possible today or is not actually accessible easily. So that's kind of where I see an interaction, not just of CBDC, but to Stefan's point, digital currencies. And if you look at the way the systems work today, there's a hierarchy. Everybody knows this who works in this space. And it's kind of optimizing that hierarchy so it actually works efficiently. And I think that's the opportunity here across the broad system, CBDCs being one part of that.
Yeah. And I think, Anthony, the point that you made with like the liquidity savings, actually, and also mentioned it in the research before, the Enbridge model. So we are coming from a technology company, right? So it's like our perspective of all these research papers in terms of CBDCs, what's going on, might not be the deepest fundamental understanding. But we're doing this proof of concept with a lot of banks. And we actually looked at the Enbridge model and we said, this is the amazing of the potential of liquidity savings that you can do with this combination basically are tremendous. And every commercial bank who looks at the Enbridge model understands that. The challenge is at the moment, right, is Enbridge is a concept. It's not a working system yet. Yeah? Until we're there, until it's built, it will take a little bit of time. We actually, we are taking a shot on it. We have a proof of concept in our portfolio that we are building on UDPN, something like the Enbridge model. So I think it will be very, very interesting to see to exactly get to these benefits that you have just mentioned, Anthony. But the concepts who are out there, which are great, some of them, they are tremendously groundbreaking. Some of them, they are like, they will transform entire industries, I'm very sure. I think 2024 could be a really, really good year to bring some of them onto the road and really have like working systems that people actually can test instead of like moving basically the next step from the concept to something that is working. And this is...
That's Steve, great. That is really, really interesting. And you mentioned the Enbridge project. And talking about that, I would like to bring to the conversation an interesting topic around CBDCs, that is cross-border payments, and specifically this use case. What potential impacts do you foresee on international remittances use cases? And how might this affect like the financial inclusion on a global scale? I would like to hear your perspective, since UDP on is it's really interesting what you're doing in terms of we are going to talk about this about interoperability and stable coins. So I would like to hear from your perspective, what do you think about this use case for CBDCs? And after that, I would like to hear the opinion from Manu about from a Latin American perspective and from an Argentinian perspective of this use case.
Yeah, look, it's relatively simple on the benefits. So we strongly believe there will be 3 major benefits by using a system like UDPN in terms of cross-border payments for remittance, but also for wholesale, right? The first one is obviously the speed, yeah? The amount of like digital assets transfer with DLT or blockchain technology is just a lot faster on what we are used to, maybe T-2, T-3, what we are used to from current banking, right? So this is one of the things. The second one is transparency, right? So if you move money cross-border, you don't know really for a couple of days where your money actually is and who is doing what with your money, right? And this makes a lot of people not happy, and inclusive the banks. And yeah, this is just the model with today's correspondent banks is just, it's outdated with digital assets. I don't believe it has a very important place to be. So this is number 2. And number 3 is, of course, after the transparency and after the speed, is the efficiency of the way doing business, right? You know where the digital asset is. And really with terms of like interoperability, connecting as many as different blockchain, but also solutions which are running on a CBDC, which are not on a blockchain technology. We already seen some of them, right? Countries who require offline payments, for example, they might need something which is not on a chain always, which is not on a distributed ledger. So there's a place to stay for them as well. So if you connect all of, or if you have a mode of transport, which UDPN is, to send messages across and basically do cross-border transfer with this, I believe it's a real game changer. I think you mentioned the 150 billion per year which are spent on cross-border transactions. I think there's a high possibility to get this down by a significant number, which could be in this, like, I don't know, 60 to 80% range.
That's great. That's awesome. And Anthony, I would like to hear your perspective as well from Ripple side. So I think that is of course one of the most interesting topics that I would like to hear from you, from the Ripple perspective. And what do you think about cross-border and international remittances as use cases, as use case for CBDCs, of course?
Yeah, I think there's quite a broad topic there. So I think that the first thing that sort of springs to mind is thinking about how, I'll say, all the friction today and the fact that it's basically synchronizing 2 parties. So from a BIS perspective, I really welcome all the innovation, all the experimentation, because that's key to trying to find the right solution. That's kind of how we're approaching this from a project perspective. So we're talking to central banks about decentralized exchanges, automated market makers as new innovations that potentially could unlock liquidity and actually make markets far more efficient than they are today, and remove bottlenecks, and potentially make a more sort of dynamic market. Now, that in itself doesn't come without challenges, and this is in terms of, you sort the liquidity problem, that's one component. And central banks talking to central banks, it's typically a wholesale transaction. Most retail will go to commercial bank level. So when you're moving the value. So the question is, do central banks want to play a part in moving value for retail transaction? Don't know. I doubt it, but I remain to be seen there. So you still need to solve, if you've got intermediaries or you've got third parties who are providing that interaction and bridging between the 2 currencies, because bear in mind, we're still going to have things like currency controls, monetary policies that will prohibit certain things that you can and can't do with the currency. So typically there's probably going to be some sort of regulated framework that allows interoperability between different countries and currencies. I think part of, to Stefan's point, this is something Ripple we've been doing for 7+ years with RippleNet, is bridging that and harmonizing the data required to try and remove friction in the data exchange cross-border. But there's not a one-size-fits-all approach to this. What's fine in one country in terms of data requirements from a compliance perspective might be completely unacceptable in another country. So me giving my passport, date of birth, and a whole host of other information might be fine in the UK for initiating a cross-border payment. In another country, they might require my relationship to the other party and a whole host of other things and how do you facilitate that? First of all, cross-border, but they often ultimately end in a domestic payment. And the domestic payment systems themselves often can't carry this data or aren't supported for payments originating overseas. So it's a bit of a sort of a complex web that needs to be sort of aligned. I think the FSB, the G20 and the CPMI are doing the right thing, trying to set some guidelines and some practices around trying to optimize. I think there's always going to be a bit of cost because you're carrying risk, and it's risk of currency exchange, it's compliance, it's a whole host of things, but it's about trying to solve those problems with new technologies, not trying to do the same thing we've done over and over again and throw more people at it. That's not an efficient way of doing things, but it's typically the way the sector's worked to date. And so the cost of sending a $10 payment is pretty much the same as a $100,000 payment. Clearly, depending on who you use, but the cost of running that service makes a big difference. And also access to these services. You often find that the ones that are doing infrequent volume get penalized very heavily because they're individual transactions versus the one that are sending high volume of transactions. So it's kind of getting that trade-off. But ultimately, we see a world from a Ripple perspective of trying to remove as much friction as possible so that value can move like information moves today. I can send an email and it gets to you within seconds in low cost. We want to sort of establish that kind of framework for payments in general around the world.
Yeah, I would like to add something there, which is also one person asked before. We don't need to forget that this is a technology which is definitely solving a problem that a human has. Okay, and talking about remittances and talking about cross-border payments, maybe not the corporate ones, but the retail ones. And which address a significant part of the money flowing globally. Most of them are initiated through cash, and there is a lot of aspects of that still need to be solved in order to have efficiencies. Because also the gatekeepers, in a way, from the control, from the compliance, but also the permission to use the network. It's a problem that these type of technologies can arise. Someone talk about TransferWise or Western Union doing remittances in this case, and how this can solve. Definitely on the let's say, as Anthony said, on the information side, how money flows. Definitely, it's interesting, and there's also other options. The problem is how we get into the retail, how we give users digital money in a way that they preserve their privacy, that they are not exposed to controls that can go against their human rights also. So I think all of those aspects need to be taken into account when we adopt these sort of solutions.
This is a great topic, and we have received a lot of questions. I would like to pick two of those. The first one, I think, is this very interesting, how, as you have been speaking about in this phenomenon of the CBDCs, it seems more that that came in from the top to down, more from the institutional and the B2B, and then to the retail, or at least the retail CBDCs seems to be more delayed than the wholesale projects, and that's quite of a particular and a strange way of digitalization and the revolution of the CBDCs. But the question I have for you guys is, how do you foresee the CBDCs affecting the traditional payment players? Manu, you have a very concrete example, because your exchange was born being as an exchange, and then very fast you launch a crypto card with one of the main brands. So how do you see, or what do you think are the players that need to be paying attention to the CBDCs? Banks, MTOs, fintechs?
Good question. This is my view. And once again, maybe I'm biased and I'm happy to open my mind to new ideas, but CBDCs from the inception or the original concept allows central banks to solve one problem that commercial banks do, which is M2, or secondary emission. If central bank can have that information and be the one giving loans to people and having all that track of information, because at the end of the day, what we are pursuing with this is how to manage data. Commercial banks will have a hard time with their main business, which is lending money. So that's one part. I feel less optimistic on the cross-border side. I think the whole coordination part of the story, it's quite hard, and people don't trust each other. And that's why I think Bitcoin as a whole, it's a really successful technology. And I'm very bullish of Bitcoin, even in a scenario in which CBDCs gain adoption, because it's actually a plan B, how Satoshi Nakamoto originally defined it. So definitely, I think there is a lot of challenges in terms of the financial institutions. How do you keep on doing what it makes you successful if that part of the business is not there yet? So definitely, I think I see a disruption there, and also a pushback from these institutions towards the regulator to adopt this kind of technology. And finally, and just to close the idea, on the retail side, the consumer, as they mentioned in Sweden and Singapore, maybe people don't see this as something valuable because the existing infrastructure, it's it's fine enough. It solves the problem. The job to be done, it's perfect, So I think it will be chaotic, definitely, and a lot of challenges, also for an industry that haven't changed much in the last 500 years.
Thank you, man. I would like to extend this question to Anthony and Stephen. Where do you guys think there are businesses? Which are the institutions, the financial institutions, or the payment industry players that need to be working in this? So, the card networks, the commercial banks.
So I think from all the central banks that we talk to, I don't think any of them see them disintermediating commercial banks. I don't see the Bank of England having a support desk and onboarding users into a wallet. That's just the cost. That's not what they're about. And actually, again, going back to Manuel's point, the vast majority of money in circulation is commercial bank money. So I don't see I'm not seeing central banks wanting to disrupt that, because that's kind of fairly fundamental to the way the financial services industry works. So what I see is the opportunity for commercial banks to look at this as a way of innovating. What we're starting to see is different asset classes emerging, Bitcoin being one, XRP, other digital assets that are out in the ecosystem that users have an interest in holding. And actually CBDC kind of falls into that bucket to some degree. So when I think about user experience, sort of safety, regulation, central banks are going to need players that can provide those capabilities, that can provide assurances that assets are safe. So can I see a 75-year-old looking after their own wallet and their own keys for crypto? A very, very, very small percentage, because you can see the headlines now for any CBDC project. Grandparent of 75 loses life savings because they lose their private key. That would be a terminal failure for the project. And actually, banks are trusted. That's how they earn their name. They have to go through an awful lot of regulation and hurdles to get the name bank in their title. And so I think there's actually tremendous opportunity here for them to offer new innovation and potentially reduce their cost. Banks typically will drive in several directions, driven by regulation, or sort of driven by challenge from third parties, whether that's their direct competition or new entrants. I think part of this is actually looking at being technology forward. I think there are some banks doing this. I think JP Morgan with JPM Coin I think is kind of showing the way of how could you actually improve the efficiency and offer new services. I think it has to be thought of in that mindset rather than just we're going to lose our business. This is an opportunity to offer new business, new experiences, lower cost, and offer better experience and service. So I think it's an opportunity rather than a threat, if I'm perfectly honest. And I'm perhaps glass half full in this argument. But I think that's the opportunity. We're getting more divergent types of assets. We're seeing this. And if you want to play in this space, you need to work with people you trust. And I think people largely trust banks, albeit all depends on where you are in the world. But generally, there's a trust associated with the bank. And I think that isn't going to go away anytime soon. I think it's about providing a better user experience and better customer service and propositions. And I think CBDC and digital assets can help with that.
Absolutely,
I think I quite agree with Anthony on this. Yeah. So the trust factor on the bank is very important. I mean, the moment that end user or like a normal person touches like really digital currencies, right? So one of the first questions obviously is, do I really own that money and can I do with it what I want? Or is it maybe the central bank that just freezes my account for whatever reason that I have and I can't even do anything about it, right? So many of these are big questions for adoption rates and stuff like this. And there's like many parts in the world where people very hesitant. And that's one of the main driver, I believe, why retail CBDCs are delayed. So banks, financial institutions, regulator know that, right? So it's a lot about like how can you create that like safe environment and trusted that people really say, okay, I can do that what I want, and that's when I'm using it. Otherwise, I'm just using the app that I'm using from the bank anyway, right? So it's in the end, it's just like a 1 and a 0 is digital numbers for me. Nothing much changes in the user experience, maybe, right? But it's more in the back end, how financial institutions transact with each other. Yeah? I also believe like in this area that we are going in, like we have also all seen like tons of fintechs coming around. People were talking about they all jeopardize the business of the banks. Banks will go down. They will not go down. They will find a way of like implementing either these smart solutions with them together. Sometimes they are very good in stealing the ideas or even the better ideas. So there is a role to play for banks going forward, right? Together with regulators, it has to be a regulated environment. There's no way around it that there's like a large scale adoption for cryptocurrencies itself. It's just too volatile. Yeah? Businesses can't operate, can't plan with it. People cannot function with it, right? I'm a big believer of the technology itself. I think with digital currencies, blockchain technology, there's a lot of changes coming through. I believe within the retail space, it will take a couple of years in the adoption because users need to get this trust factor, right? On the institutional side, I see a much faster adoptions, and I believe wholesale CBDCs, they will come much faster than retail.
Thank you, guys. Guys, we are almost in time, but before we wrap up, I want to give you all the opportunity to download our last report and research around CBDCs. And in the meanwhile, our participants scan the QR code. Just to close, I want to give you all, Manu, Stephen, and Anthony, the chance to make some concluding remarks that you would like to leave our audience before to close today. What should they be prepared in this phenomenon?
Perhaps I'll go first. I think it's to look with open eyes. If we think back to the 90s when the internet started to appear in most of our lives, did we envisage where we would be 20, 30 years on from that? I think it's the same thing with this technology. It's thinking about a bigger picture and a bigger opportunity to make things better, more equitable, cheaper, and easier to access. And that applies not just to payments, but also to other financial services and financial inclusion. So I think it's look further ahead than the next 6 months. This is an evolutionary or a sort of a revolutionary technology, and sort of treat it as such and leverage that opportunity.
Thank you, Anthony. Stephen, Manu, would you like to do or to provide any concluding remarks before wrap up?
So yeah, I think we need to be more aware and be more active into understanding, and I don't mean only people in the industry, but society as a whole, about what these type of things how that impact our life. I think being vigilant, it's an important thing, and be active as a user, as a company, and as Anthony said, be open-minded, because there's a lot of things out there that can be quite disruptive for good, and we need to adopt it as soon as possible. So yeah, that's it.
Great. Stephen, last minute, do you want to add something, some final thought?
Yes, and I would like to repeat something that I said earlier. I think we are standing on the brink to the biggest disruption that the financial institutional side or the financial businesses have seen in the area of the internet, of Web 2, Web 3 that is coming along. So I'm quite excited about it. I think it will take a couple of months, years, even a little bit longer until all of these digital currencies, digital asset stuff is implemented and widely used. And to go the way there, we all need to understand, we all need to learn, we all need to collaborate on that. And this is one of the things. So one of the things of UDPN itself is also the aim for collaboration. There's many other systems out there which connecting digital currencies, digital assets. So we believe there's a lot of possibilities because use cases will only grow and technology will getting more complex, and the demand from the users about simplicity. And I'm looking quite excited into the future actually on that. Yeah.
And I have one last question. In fact, it's one of our audience. What should payment companies and banks do to prepare for this trend?
Go on many as POCs as you can to test out and understand it.
100+1 on that. I think it's experiment, learn, test, understand the art of the possible. And I think that's where the opportunity comes.
And of course, paid POCs, yes.
Very well said.
Yeah.
Very well said. Well,
Yeah,
thank you. Yeah, Manu,
after
go ahead.
final call. After working with banks, I think the way forward is can work. Try to innovate not within the structure, but in parallel, because things tend to take too much time.
Amazing. Very well said. Well, guys, as you can see, there are several questions that we couldn't answer. Thank you all very much for your insights and for sharing your experience. And thank you to our audience members, especially to those who asked questions, because you were the ones that really drove the conversation. As a reminder, you will receive a follow-up email from PCMI. So we'll really like to be in touch with all of you, with all of the participants of this webinar, and this is the way that we close this space. So thank you very much. We'll be in touch soon, and wish you all have a very great December and end of the year. Thank you, Anthony. Thank you, Stephen, and thank you, Manu, for letting us learning from all of your huge experience.